Hi, folks. This is Sean Hyman from the Logical Investor, and just wanted to start off with talking about oil and where it's at, and uh, potential expectations for where oil goes. So the news narrative right now is, yes, there was, a bombing of Saudi Arabia oil facilities, originally thought to be uh, out of a group of Yemen rebels that have ties to Iran, and now they're saying that it comes directly from Iran as they trace the path and they look at the product used, which is Iranian, as they collect the parts and uh, remnants of what's still left from the bombings, from the drones and the missiles, etc., and so forth like that. But there's several problems with what they say, because the news headlines are they're going to restore capacity. Some of the headlines are saying within 3 weeks, end of the month, stuff like that. And one, I just find that hard to believe. Two, some pros that I have read that know those facilities say that there's a lot of custom parts that they have that are just custom to those facilities, and that if those particular parts were bombed, there's a good chance that they were, with as many hits that took, that it could take up to 6 months for some of those parts to be remade if they were ordered and they got on them, basically doing double time. So, um, I don't really buy that narrative. Also, I've seen a couple of other articles that didn't make it as prominent in the press, but where Saudi Arabia has already warned China that there will be some delayed deliveries in their October deliveries, and that some full capacity may not happen until late November or the end of the year. So those didn't quite make it to as top of the headlines as the headlines of 70% of capacity being restored so quickly. So I really don't believe those recent headlines of everything being restored so quickly. Obviously, I'm sure they can restore some level of production a little more quickly, but they had 6 million barrels go up in smoke, and a ton of their facilities just totally wrecked. And I'm not thinking they're going to get that resolved in 2 or 3 weeks. I think that's, if you have to read between the lines, because if Saudi Arabia comes out and it gets to the mainstream press, and the mainstream press propagates what Saudi says, and if they were truthful and they say, look, it's probably going to take us months to get this all resolved, that alone could shoot up oil prices. And uh, while Saudi Arabia probably wouldn't mind that, Trump minds that a lot, because he doesn't want prices getting out of hand, or at least looking like they are, because the higher oil goes, the more of a weight that can be on the economy, and the tougher that might be potentially for his reelection. Now, I'm not necessarily of the mind that if the economy goes lower, that he stands no chance of getting reelected. I don't necessarily believe that at all. And even though they show him polling low, what I will take over polls any day is the crowds at his rallies. Every place he goes, it seems like there's sold out, overcapacity crowds, and so there's still a ton of support out there. So I'll take that as a gauge any day over some poll that some outfit has that probably is already biased against Trump in the first place. So anyway, there's a lot going on. It's probably going to take a while to fix the oil problem. Even if it doesn't, let's just say the most optimistic scenario happens, and everything is patched up within a few weeks, which again, I totally don't believe. Let's just say that is the case. Okay, then there's the issue of the oil facilities are still unprotected, really, because how in the world were they able to get 17 to 20 strike hits on these oil facilities without Saudi Arabia or the U.S. either knowing about it or being able to do anything about it in time? And we both have forces over there. We have forces over there, uh, and so does Saudi Arabia. And so everything that we had and they had, you know, this stuff got past that. over there. So you still got potentially unprotected uh, oil facilities over there, and also there are many other major oil facilities that are just as unprotected. Like I saw an article where they were highlighting how Canada has a lot of oil facilities that are just as unprotected as what Saudi Arabia had, and so you've got a problem in modern day warfare where you can buy a $20,000 drone that can, create 200 million or 200 billion dollars worth of damage, and it can fly low. It's very little, hardly be seen. Probably, possibly not even picked up on radar. I'm not sure, particularly with their size being so small and them being able to fly so low. And so there's some really big consequences there that may have opened up a new era of stuff that we have to try to fend off, and that Saudi Arabia has to try to fend off. So um, there's there's the potential for further attacks. There is there's still potential for a war or retaliation because they're stupid if they just let these guys bomb their facilities and then don't do anything in return. It shows weakness and that sort of thing. It's kind of between a rock and a hard place because uh, Trump is, putting the pressure on Saudi Arabia to keep oil prices low. Saudi Arabia needs Brent crude to be more like $80, $90 a barrel rather than in the 60s. And we're going to get some charts on this stuff here in just a second. Um, and so it's really kind of a big mess. But if there's a battle that happens, a war that happens in the Mideast between Iran, Saudi Arabia, or any others, um, those tensions alone could spike the price of oil. So there's just a lot of loose ends and unknowns that aren't tied up yet that I really believe can be the catalyst to take oil higher in its wave three. So this is WTI crude, and so there's also what I believe to be a lie propagated as far as it concerns WTI crude. So here's the narrative that's propagated with WTI crude, which is what we use primarily here in the U.S. We do use some Brent crude in California, Washington State, and some others, but largely we use WTI crude. So, which stands for West Texas Intermediate Crude. And so, here's the narrative there. They say we're, one of the world's biggest oil producers now, and we export oil. And that's true. But the thought process is that since we are one of the biggest and since we export oil, that we won't be affected by the Saudi crude prices, which is untrue. So one reason is because even though we're an exporter, we are still an importer of oil from other places like Canada and Saudi Arabia, and it usually just boils down to where it's cheaper or more proficient to get the oil from. For instance, since California's rejected so many pipelines, it's pretty much easier for them to get Saudi oil sent to the shores of California. If they had pipelines, they could just get WTI crude over there more easily. But they haven't been as open to pipelines, as you know. And a lot of the rail cars that have transported crude, man, when they have a wreck, I mean, they freaking blow up and cause massive havoc. So they're really not as near efficient way of sending crude as pipelines are. So there's all kinds of reasons, why different places use different crude, but for the most part, WTI is used. So we are a large producer of oil, but we don't have a lot of excess capacity, which we would need. Two, we have a ton of idle oil rigs right now, and it takes a while to ramp those rigs up to get them functional and up to full capacity. So that's another problem and issue. Three people say, well, we've got these strategic petroleum reserves. So sure, we do have strategic oil reserves, and here's the only problem there. It takes 13 days. Excuse me. It takes 13 days to get them to market, and they only last for 90 days. So if the Saudi oil problems lasted for over that 90, 100-day mark or so, then there's some real issues there. And then fourthly, the reason why I call foul on the whole notion that we aren't affected by the rise in Saudi oil prices is because WTI jumped the same as Brent crude jumped. They were both up, 15 to 20% intraday on the same day, and so that alone is proof that that is not the case. So here's a chart of WTI crude on its weekly chart, and so here is your ABC downtrend. So everything from here on out is the next uptrend. Here's wave one. Here's wave two, which I've said could go A, B, C and go deeper and then go up, which is still a possibility, but in light of what we know now with all the oil stuff, is less likely. So it's more like this is 1, 2, and then we're in the early stages of 3, which has 5 waves within it. And here's 1, 2, and we've broken out into the 3 of 3. Third wave within a major third wave is very powerful. So I'm expecting that to go quite a bit higher. But somewhere in through waves 3 through 5, we stand this great chance of hitting, $100 a barrel oil again. And $100 a barrel oil will be good for oil and oil stocks, and even a lot of those deep sea drillers that have lagged in a previous portfolio, UWR portfolio. Wave 3 in the long-term chart is what really makes them come alive with these much higher oil prices. But oil becomes a weight on the economy. It's become a weight on the economy in the past, anywhere between the $100 and $114 mark, right in here, and caused sell-offs and recession and market sell-offs and all kinds of stuff. So as that unfolds, there's a good and bad side to that. It's good for our oil stocks. It's good for our oil positions. It's not good for the person who's strictly a consumer that just puts gasoline in their car but has no oil investments. But it will eventually act as its own weight on the economy, and Trump knows that, so that's why he really doesn't want this to happen. However, Trump doesn't control the oil market. OPEC doesn't even fully control the oil market anymore because they control about a third of the oil market today, where they used to control about 50% of the oil market collectively. But you see the MACD heading higher here, both in the more recent, but you also see this has been heading higher for a while. You've got the RSI heading higher also. So I'm looking for WTI crude and Brent crude to head notably higher over the coming months to year or two. That won't be instant, but wave threes can get moving, so they can tend to be very long, strong moves. So, by the way, the talking heads on TV, many in the media and economists and everything, were super bearish on oil right in through here. And what is that? Wave 2. So news is going to lead you the most astray towards the end of wave 3 and anywhere in and towards the end of wave 2. So while you should never be news driven or news led, if there's ever a time where it's going to lead you astray the most, it's in these two times. So, and historically, when do my own subscribers get all, in knots and second guessing themselves, the strategy, me, whatever? Wave C, wave 2. That's how real and powerful Elliott waves are. However, since you have the knowledge of Elliott waves and and the collective sentiment that goes with them, that should be a clue to you that you don't have to join the emotional party. You can say, oh yeah, this is what it's supposed to feel like in that wave, and that's that wave, and it has no bearing on C, has no bearing on wave one coming, two has no bearing on, no matter how that feels at the time of wave three coming, etc. So feelings are atrocious leaders, but they're great followers. So you strategically, logically plan something, and feelings follow. But feelings make horrible leaders. And if you have a relationship that is based off of solely mushy gushy feelings, that's not going to make it the long haul, because there's going to be times where you don't have feelings for that person, meaning you're mad at them, you're ticked off at them, you're not as thrilled with them, the new has worn off, whatever, and that doesn't make it 30, 40, 50 years in a marriage. But strategic commitment and planning and purposeful love towards each other, purposeful affection, uh, planned time together, and planned communication and fostering those types of things together. Guess what that does over time? That strategic planning uh, that you would do in anything else in life, business or whatever. People think for some reason if you do that in your personal life that it takes all the romance and feelings out of it, and it doesn't. And the reason why is because when you strategically plan like that, your relationship with purposeful times of talk and communication and love and affection, time and commitment, and telling each other in the good ways of what you see in each other and believe in each other, stuff like that. Guess what that does? That fosters some great feelings and emotion, and makes it an amazing thing. So you do the purposeful strategic actions first, and feelings follow. That's how 30, 40, 50-year marriages last. But the people who are in it for the mushy gushy, and they think that love is only the mushy gushy, when that is gone, so are they. So investing is similar path. When something's running up, that's when you know the gushy feelings are happening, and they're all in. And when something goes down for a while, they have the bad feelings, and so therefore they want to cut bait and run, just like they want to cut bait and run from that relationship that they don't feel like they have feelings in anymore. Therefore, they must not be in love anymore. So, by the way, if you ever want to see what really love is and what God says love is, look at 1 Corinthians chapter 13 and read that chapter in the New Testament, 1 Corinthians chapter 13, and you will find what love is, and what not what man says it is, but what God says it is in the Word of God. And what you'll find is there's not one emotion mentioned in there. It's all it's all strategic, purposeful stuff. So, in other words, it's not emotion led type of thing. So, for instance, it starts off, love is patient, love is kind. Well, those are purposeful actions, and those are the decisions that you have had to make towards a person. They're not just going to fall on you, like something falling out of the sky. It's not just an emotion. It's not something fickle or something you're just temporarily moved by. Like, it's strategic, it's long lasting, and it's a decision. Because I love this person, I'm going to decide to be patient with them and kind to them. And that's what demonstrates love to them. So, in the same way, we can't be emotional about investing. We have to be strategic, and that's why we use measurable things. Fundamentals, firstly. How big is the company? The price to earnings ratio of it, to find out how much price we're paying for the level of earnings that are out there. Profit margins, how much they're making in raw earnings, EBITDA, how much they've got in cash. In other words, how deep are the pockets? Um, the level of debt that they have relative to their market cap. All these things tell us, they take the temperature and the pulse of the company and tell you what kind of condition it's in, how big it is, how stable it is, and how cheap or expensive it is. And we look for stable and big, and we look for cheap fundamentally. So that's first and foremost. Nothing else matters in front of that. And then after that, technicals and sentiment, which within technicals, you can weave in Elliott waves because we use things like moving averages, RSI, MACD, etc. And within the sentiment, we know sentiment because of the Elliott wave stages, wave C's, wave 2s. We know the uber bullishness of wave 3s and 5s. Back up here at the end of wave 5s, they think the rally is never ending in oil. Down here towards the end of wave C, they're thinking that oil will never return again, that it's forever, done with, and it'll always be some low suppressed price. And when it's at 27 on Brent crude, they never see a day where just a couple of 2.5 years or so later, it's going to be at 86.74. They would never believe that. They would never believe that it would have gone from about 130 a barrel here to 27 a barrel here, and they would have never believed, that it would have gone as far on the upside either. Emotion, would have never gotten you to believe this would have stopped, or that this would have stopped, or that these would return, etc. So Elliott waves tell us a lot, and the reason why they work is because they really measure the emotional sentiment collectively of the total investing crowd worldwide. And so, while I can't tell you what any one particular investor is thinking, as a whole, I can tell you, exactly the emotional state that they're in and how they're likely trading and investing as a result. Because remember, the market makes up both traders and investors. So even though we're investors, I know how both crowds are thinking because of that. Sentiment also shows up in volume charts, which you're not going to see it quite as much in oil charts, but in individual stocks, you'll see it a lot more. So we can tell the intensity of selling, the intensity of buying, and we know a lot from the sentiment there as well. So Brent crude, same thing. You had your A, B, C downtrend, wave 1, wave 2, going into wave 3, RSI getting stronger, MACD getting stronger. So same thing there. Both of them popped about the same, and so you're looking at the same formations in either place. So we are definitely affected by what happened in Saudi Arabia, and the charts proved it with WTI popping more than it ever popped on one day since oil futures contracts were created, which at one point was up 20%. And sure, it's given back some of that because it gaps up, and a lot of gaps end up getting filled. But and people will say all gaps get filled. From my history of seeing stuff, I would say the majority of gaps get filled. I wouldn't say emphatically all gaps get filled. But so what did we have on WTI? More of a close-up daily view. Over the past years, goes from 42 to 66 as a three-wave correction down to 50-ish, and breaks that corrective wave into a wave 3, where actually that wave 3 would have ended more likely. I assume that wave 2 would have likely ended right around here, since this is slightly lower than here. So it was probably more like A, B, C. But either way, you break it and head into the next up wave. So we have pushed higher, and this pullback, because of this pullback, most people are thinking the party's over and it was just a temporary thing and stuff like that. Locally on the Nextdoor app, people were talking about it, and a lot of people were just writing it off as no big deal because of the day or two of pullback that happened after the spike up. So they think it's over, and when the average Joe thinks it's over, they're usually wrong. And so I'm expecting this to, break out, pull back, which is common, and then eventually head, much higher. Now, again, could it pull back a bit further before heading higher? Absolutely, it could. But notice what the MACD is doing on the daily. Notice what the RSI is doing on the daily. It was strengthening, getting ready for this move up that we are seeing overall. Brent crude, you got the same thing happening. So we'll look at it real quick, and then we'll get on to our positions. So same thing here. Brent crude, you've got a move up, a three-wave pullback. This three-wave pullback was broken somewhere in right in here, broke out, pulled back, and I believe we're getting ready for the next move higher. RSI heading higher, MACD heading higher, etc. So, and notice how the buying pressure is even more so than the selling volume as well. So I don't think the average Joe is ready for the higher prices to come. So I filled up my vehicles on the day that the attack happened to make sure that I didn't pay any higher prices um, for it. So I filled up my cars, and like an idiot, I didn't think about filling up my boat, which holds far more gallons. It holds at least 100 some odd gallons minimally because um, I don't run the engines dry, obviously, and I put about 400 some odd dollars in between the two tanks because there's two engines and a generator on that boat, and so thankfully somebody on Facebook had said, "Well, I'm sure you filled your boat up too, right?" And I said, "No, like an idiot, I didn't even think about my boat. Thanks for reminding me." I went over to the marina and filled up my boat as well, and so the next round of gas prices that come through will likely see some increase over the previous ones because when the attack happened, that gasoline had already come through and been priced. And while there were some places that went up in anticipation of what's to come, most of it will be felt in the next wave of gas that's delivered to gas stations more than likely. Um, and then as this if this continues up like I believe that it will, um, then there'll be higher prices in the future. And so uh, if you watch Brent or WTI crude, um, as it's trending higher over time, usually the earlier and the sooner you fill up, the better. And particularly when oil has its pullbacks on its chart, helps you to pay overall lower prices than the average person that doesn't look at or monitor uh, any of that. So so our oil on stock charts is dollar sign. So the dollar sign symbol WTIC, and that stands for West Texas Intermediate Crude, and that will show you what it's doing. And of course, you need to look at it on a weekly 10-year chart and daily 1-year chart. But for any of you who like to play around with that and keep track of what oil's doing, that's the easy way for you to do that. Okay, let's get on to the S&P 500, which is currently rallying some today. My tools here. Looking for something that would show. Anyway, let me just use what I use here. So you've got actually this would probably be a better one to use, this rectangle. So the last selling that happened in the S&P 500 started about here and here. So that high was 3027.98. So that's basically 3028, and it's close enough to 3030 to where that basic area and region would be an area of resistance down to about the 30 really about the 3000 area all the way up to this almost 3030 area, but a lot of it started, this whole big slide off started right in here, which is in the area that we're in right now. So this is a big area of resistance. A ton of sell orders came in right in here to shove that down like it did right here. So institutions know that, so they've been trading cautiously as they approach the top of this area here. So it will be interesting to see if we end up blowing through that, which if we do, that just means stocks got that much more overvalued and expensive and that much more risky before heading lower, or if they fail at those areas and just head lower. So it's going to be very interesting. The vote that the MACD's given it is that it heads lower, whether it's a fake out or not. It overall heads lower. The RSI basically the vote that it gives it is the same thing. Loss of momentum there, loss of momentum there. So there's a good chance that the S&P fails again in the medium term, no matter what it does near term. Also, you've still got the price a mile away from the 200-week moving average, and we know over time those come back to that. You've still got massive deceleration of the RSI, which is a huge warning sign, in my opinion. It's a huge heads up sign. How the price went up, but the RSI is losing momentum. The MACD is losing momentum as well, and so these things are getting so much worse. I had to pause the video real quick because some packages arrived at my door. So we are, building a house, and so my wife has ordered some lighting and some chandeliers and different things and stuff for our house, and so I think that's what's in some of those. So anyway, she's an awesome decorator. She makes a house look like $1 million, even though it might be a third of the price. So she does some amazing things and gets some amazing prices. One of the best bargain and value shoppers I've probably seen. So so the S&P 500 mile away from its 200-week moving average and diverging technicals on the RSI, and so that's an eventual. It's a heads up, and it's a big heads up because it lets you know what's coming, but not necessarily exactly when. But like notice in the past how this started slumping, and it gave a heads up while this was still rallying that this sell-off was coming. So, but it's one of the few things that really acts like a leading indicator are these divergences away from price. So particularly on the long-term weekly charts, they're very significant, even though they can take a little bit to unfold. They tell you and point to what's likely coming and give you a heads up ahead of time so that you don't have to necessarily be a part of the massive sell-offs. Now, you may not get every single bit out of the run up, but you miss the downdrafts. Remember, the next downdraft won't likely be just a pullback towards the 200-week moving average because we're at the end of a bull market. So it ends up, likely falling far below that 200-week moving average. Okay, so let's get on to our main positions. With all that went on with the oil stuff, I figured it was time to take a little bit of time and talk about that, because there was just so much going on with that, with what all was happening in Saudi Arabia and Iran and so forth, which we still haven't seen the end of. Because we don't know the retaliation that's going to happen, what repercussions other than additional sanctions will happen for Iran, if they will make some future moves, etc. So GLD has done basically like I believed that it would. Said we had this massive run up, and I said, hey, just know that they don't go straight to the moon. That there are, with volatile upside, there's also volatile downside, and so we've had a fairly volatile pullback from almost 147 to 139s, and we don't know if that goes deeper before heading higher, or if this is done and we're ready for our next turn up. We do know that we've gotten oversold temporarily. We do know that the selling volume keeps getting less and less, which is bullish, and we're likely getting ready for our next MACD buy signal because this MACD histogram keeps getting less negative. So as that starts to get towards flipping, like you see here, we get close to our next buy signal. So that's all looking good. But things just don't go straight to the moon. There are pullbacks and corrections along the way. Sometimes they can be short and swift, pull back and head higher. Excuse me. And sometimes they can be, multi-month, consolidations and corrections lower to sideways before taking off again too. So just know that can be the case. So we did get part of that pullback that I've been looking for. There may be more to come, but overall the trend is still up. Higher high, higher low, higher high. There'll be some, higher low that's much higher than this low that probably doesn't exceed our 200-day moving average and may not come anywhere near it. but and then we push to higher highs than what we have here, and so that's just how markets work. So GLD very bullish on. It's pared back near term, but we've been expecting that to happen. FXB has really turned a corner more recently when it's completed its latest three-wave pullback, and it's broken the latest wave of that right in here, broke it, retested it, and took off. And so that's a bullish sign that it's broken this and headed higher. It's above its 50-day moving average. The RSI is starting to strengthen some again. You've got your selling volume, which continues to get lower. You've got your MACD, which broke a downtrend line right in here and is heading higher as well. So those are all bullish signs. So again, I'm bullish on where that goes in the future. The Bank of England, their central bank, held rates steady, so they didn't reduce them, they didn't raise them, and they're being cautious because of the potential for a rough Brexit, which I believe has already been factored into the price of the pound overall. Then you've got EWW. This one is very volatile, so it vacillates a lot, both southward and northward. With large swings in both ways. And so we had a large swing down here, a large swing up, large three-wave pullback, downswing here. That C wave was broken right through here, and has been heading north. Broke that C wave downward move, broke above the 50-day moving average, broke above the 200-day moving average. Has been consolidating above it. It's even broken above the whole correction there, which is another bullish sign. It is temporarily overbought, but overall, I mean, you've got the MACD continuing to strengthen. You've got the selling volume continuing to dissipate. So we likely have either some form of a bit more consolidation and we head on up, or we have a bit of a pullback to somewhere around the 50-day moving average and head on up from there. Either way, I'm looking for this to have a nice push higher. And since this has pulled back a good bit, you've got averagings in where even when this gets back to our original first entry point, you will be nicely up on your money. So this one I'm very pleased with how much it has strengthened and how well it's doing. And then you've got LPL, which again is one that some had freaked out about, even one calling it a real dog. When this happened, again, it's just an emotional statement, not a factual statement. It's just how they feel about it. They've succumbed to their feelings rather than remaining logical. So anyway, here's your A, B, C correction lower. When do people get the most stupid on stocks? Sometimes even my own subscribers. Wave C's and wave 2s. There's wave C, at least on the daily charts, wave C. And so, but what's your selling volume keeps getting less and less and less, but they pay no attention to that. Your MACD's gaining strength there. Your RSI is gaining strength. It's come back above the 50-day. Again, this thing is volatile both ways, both on the upside and the downside. So here it goes from 675 to 981 within mere months. I mean, that's a massive percentage move. From 980s down to 670s, up to 780s, down to 508, up to 653. So now, since we've got the last ABC correction out of the way and we've broken wave C, we are likely heading up overall. But could we get some more volatile pullback before heading higher? Sure, we could. Or could we consolidate sideways before heading higher? Absolutely. But I'm eventually looking for this to go back to that 12 and 13 region. And since you've got all of your averagings in, by the time that happens, you will be looking very nicely. So Again, very bullish on LPL. They're making more products for Apple's supplying screens to them on some of their iPhones and I believe iPads and Macs as well. So just a good thing. So BBBY, here's another one that even some of my own subscribers freaked out about. And again, they tie their emotions to it. They're loving BBBY when this happens, right? And then they're sad and depressed when this happens, and they're thinking that this could never happen, yet part of it already has happened. So this one, this is probably A, B, C right here, but definitely C's been broken, and so your next thing is 5 ways up. So here's 1 and then 2. We don't know if it's, if 2 comes back and something more deeper corrective, it could, or if it just goes on up from here. But then you'll have the next 3, 4, 5 push higher. So I'm looking for this to do something like that and head notably higher. The MACD had sort of flattened out and turned around and headed higher, which is good. The selling volume continues to get less, as you can see here. So the sellers are losing their grip. The RSI is turning up some as well. So again, I'm looking for this being in its next overall move higher, and so things are looking good there. Sooner or later, you just have to learn to trust the fundamentals firstly, and things like your technicals and sentiment, stuff like that secondarily, and which means never trusting your emotions. I never ask myself how I feel about a stock. It's irrelevant. So, and some people say, well, yeah, I never ask myself. No, but you go off your feeling. So subconsciously, you ask yourself about your feeling. You got the feeling, and then you ask yourself, how do I feel about that? Oh, I feel bad about it. And so since you feel bad about it, you think it's a bad stock. And the reality of that has nothing to do with what you feel. Nothing, not at all. No more than feeling euphoric at the end of a wave 5 means that the rally is never going to end. Feeling that the pullback is never going to end in a wave 2, or that the end of a bear market in wave C is never going to end, that's just as much a fallacy, and it's just as untrue as well. So anyway, this is probably an A, B, C, but could be A, B, and C. Either way, C is broken here on CAJ on the latest corrective pullback, and so we're in the next move higher. Now it's volatile both on the upside and downside as well. Went from 25s to almost 30 here, did go to over 30 here, then pulls back to 25s again. Now we're at 27.41. So this has gone up almost daily for a while. So what's the next thing to be expected? It would be not unusual to see a decent sized correction before heading higher. So just know that can happen. Or it can take a breather and go sideways for a while and consolidate under this 200-day moving average before breaking out and heading higher. Any of that's common. Your selling volume just continues to get less and less, so that's a good sign. But notice how much less it's gotten here recently. Your MACD is picking up once again. RSI is picking up, but is overbought, so it's another reason why I think that we may get some stall or correction before heading higher after this move higher. So again, very bullish on Canon overall. It's one of the few pockets of value out there and in good fundamental shape. So 3G, which partnered with Buffett on Kraft Heinz, had backed out and sold their shares fairly recently, supposedly. But I find it interesting that on the chart, this is all it could produce in selling volume. So here was your massive selling volume. Then here's the next biggest spike, and here's your next biggest. So even with that partner exiting, the selling volume from 3G and from the news of that produced even less selling volume than here and far less it's all a far cry here from what this was here. So I still believe most everybody who was going to sell, most of them sold here, with a little bit selling here and here. So this is likely the bottom. Not a guarantee that's the bottom, but likely the bottom for this stock. So and your MACD has already been firming up some. Your selling volume lessening, so it makes it easier for the buyers to take back control. RSI is slightly higher. So I'm looking for this overall to start to head higher. But could we pull back before we head higher? Could we go sideways before we head higher? Any of that's possible, yes. This takes no emotional management at all. This takes a little bit of patience. This takes a little more belief in the stock, etc. So they require different amounts of emotional stability and toughness and stuff like that. But when you focus on the fundamentals, I really don't care about the wiggles and squiggles along the way until they're at the point where it's time to take profits, or there could be some big sell-off and loss of massive profits. That's when it starts to matter to me. So ENI, this was pretty much close enough for probably a double bottoming area right in here. Here's your latest three-wave pullback, and the C wave was broken here, so we are on our next leg higher. This has run from 28s to 30, 31s, almost 32. So just know that a pullback could be in order before heading higher, or a sideways consolidation before heading higher. Just know that's normal market mechanics. So don't ever just expect this to happen. That rarely happens, where something just goes up almost without any kind of pullback or breather or consolidation or anything. That just normally does not happen. So get this one out of your mind, because that's the one that people want to happen, and that rarely happens. It does happen, but it's super rare. Like when we were on Foot Locker, it happened. I mean, you had this massive, jolt higher, and we took profits in like 3 weeks. Okay, it does happen, but that's what you call an anomaly. So you can't set up anomaly expectations for like normal expectations. So to me, anomalies, they don't even come up in my thought process. And when they happen on rare occasion, we go, oh, that's the cherry on top. But other than that, I don't focus on it at all. So I never expect this. I expect normal market ebbs and flows, like history has always proven to me that it is. And so that's what I go to looking for. So sometimes those are sideways consolidations, sometimes those are pullbacks before you get your next advance. So I'm looking for that type of action to happen. Again, very bullish on ENI and oil. As oil goes into wave 3, it's going to be very good for ENI for sure. And SLV, is our next one. Higher high, higher low, higher high. Now this went from 1339 to 1835. And it's like I said before, people don't think of upside volatility as being volatile. They only think of volatility in a negative state. But if something can go from 1339 straight up to 1835 within, what is this, 60, 90 days, then upside volatility happens, downside volatility happens as well. But remember, it's in the context of an uptrend. So we went 1311 to 1521 actually. That was actually the peak right there. And then we go from 1521 to 1339, 1339 to 1835. Massive upswing. So it's only normal that we have some sort of pullback. That could either be to here and then head higher, or it could be something much deeper before heading higher. Any of that could be normal. It could be to the 50-day moving average, to the 200-day moving average, or anything there in between. With this being such a parabolic move, it's probably not going to make it all the way back to the 200-day moving average, but could, it might be consolidating here above this very sharply rising 50-day and head higher, which is very likely, or we could get a bit more pullback and and complete a larger 3-wave pullback before hitting higher. Any of that's likely. We are oversold again on the RSI. The selling volume continues to drop off like a rock, and this MACD is still trending higher overall. broke a downward consolidation, back in there. So again, silver very bullish on, but when this was going to the moon, I was getting you prepped ahead of time. Don't get euphoric. Don't lose your head. Remember that volatile pullbacks happen. Remember to expect them. And sure enough, no sooner than I had said it, a couple of days later or so, whatever it was, boom, it starts to happen. So just know that that's the case. Yet it's still a massive uptrend. Then PPLT, I could almost say ditto and be done with it, because PPLT is the same thing as GLD and SLV to varying degrees. So higher high, higher low, much higher high, a very parabolic higher high. So to expect a volatile pullback is just par for the course. It's just the norm. So you got RSI heading higher. You got MACD heading higher, which is bullish. You got your selling volume dropping quite a bit. Buying volume picking up, by the way. So this goes from 74s to 93s in just 3 or 4 months. And within a handful of trading sessions, it goes from 80 to 93, which, just above 80 is where we got into it, 80.27 officially in the portfolio. So this goes to 93.47 in a blip, handful of trading sessions. And then now we're in the volatile pullback. Question is, after a move like this, which is very parabolic, does this end here with that being the depth of the pullback, or does it have something deeper before heading higher? And nobody knows that ahead of time. We just know those types of things are normal market mechanics. It's not likely to go all the way back to the 200-day moving average. It could go back to the 50, and sometimes when there's the stronger move, it may not even make it to the 50. It may make it to something more like the 20-day moving average, which is the middle dotted line of this Bollinger Band here. So these are the most likely moves here, where we're in one of them now. So we'll see if that turns around and heads higher. If it doesn't, and we're looking at something a little bit deeper pullback before heading higher. But either way, we'll be going to higher highs, and so that's looking good there. So again, PPLT and SLV, one of those two, depending on how they surge and how quickly that happens, could be some of our next ones to take profit on. An unknown is of course ENI, ticker symbol E, because if oil starts going crazy, then to the upside, then of course ENI could skyrocket as a result as well. But on the norm, I'm looking for SLV and PPLT, one of those two, to be one of the next sell candidates eventually once the next massive surges happen, and let's take profits after that. So anyway, that is it for this week. Just know that you have to read in between the lines of what the Fed says, sometimes of what Saudi Arabia and OPEC says, and sometimes even what Trump says. So even though I'm a Trump supporter and believer in Trump, you also have to know that a president has to project confidence. This is basically his job to. So he can't ever say, oh, the economy is in bad shape, or oil prices are going to for sure stay low, or anything like that, because somebody of that power, president, Fed, so Federal Reserve, OPEC, Saudi Arabia, any of those guys, if they say, oh, oil's going to head notably higher, just by their statement, oil can head notably higher, even aside from supply and demand. In other words, at least temporarily. So you have to kind of read in between the lines with these people and agencies, because they can't always really say what they truly believe and would almost like to say. And the second of all, when it comes to the Federal Reserve, people are always looking for the Federal Reserve to tell them the next time they're going to be in a recession. And you tell all these news agencies are always picking the Fed's brain, and they're all basically trying to get at one question: when's the next recession going to hit? Well, one, their history uh, shows us that they never tell us about recessions ahead of time, and that either means one of two things: either one, they don't know when they're going to happen, which is possible, or two, the more likely case is that they do know when they're going to happen because the real time data that they have coming in from all over the place. But of course, they can't tell us, or they could make a recession happen faster and deeper and longer than it would have been just because they came out and said, hey, we're going to enter a recession. So if the Federal Reserve came out and said, we're going to enter a recession, what's everybody going to do? Consumer spending is going to cut off. People are going to start hitting the savings harder. They're going to be paying down debt more, stuff like that. When you cut off the spigot of consumer spending, overall, that's 70% of the economy. So that alone could put the economy in recession. Now, we as individuals, we do need to be savers and not be spending everything, obviously. And most people are spenders, and they spend it all and almost save almost nothing. But anyway, if the Fed came out and said that, that would be huge. By the way, speaking of spending and saving, a memory had come up on my Facebook of a post that I'd posted quite a while back ago that re-emerged as a Facebook memory on my page, and I re-shared it the other day. And if you're not on Facebook with me and Twitter with me, you ought to consider doing it, because there's even a lot of articles and things like that that I share on those two areas, Facebook and Twitter, that I don't even always share on the site just because I don't want to overload the site. And anything that's pertinent that you for sure need to know, obviously, is on the site and obviously in the premium newsletter section. So don't worry about that. But if you're like a news or information junkie and you want to know more about my thoughts and also the things I'm coming across, then in addition to the site, you can hook up with me on Facebook and Twitter. But anyway, so I said every week or two, people receive money from their business or from an employer through a paycheck. Some will consume all their money by spending it all. Others will save and invest a part of it, and years from now, don't think the latter got lucky because they did something consistently and on purpose, and don't hate them for having something if you spent all that ever came through your hands. So, while this is a simple thought, it's also something that people really don't think through. And they'll say, well, I don't know how they did that, or they don't deserve that, or I'm just as good as them and they're not better than me, and blah blah blah. And while whoever they are, may not be better than you, their thinking might be better than yours. You know what the nice thing about that is? We can change our thinking anytime we want to. Now, it may not be an instantaneous thing like a light switch, but as we put new types of thinking before our minds, it can change our thinking over time. And our financial results are the product of our current and previous thinking. So, middle class are the middle class because they have middle class thinking. The rich are the rich because they have rich, upper class thinking. The poor are the poor because they have poor thinking. So thinking has to change before the economics of your life change. It's a predecessor of that. So a lot of people think, no, my pocketbook's got to change, and then I can think about some other things, or I can think about things in a different way. And I'm gonna tell you, from somebody who's gone from poverty level to middle class to, at times, have been probably lower upper class. Um, so it required thinking shifts of me ahead of time before my financial condition ever changed. And every thinking change always conflicted with my present thinking, and so my present thinking always seemed right, and the next level of thinking always initially seemed wrong, but yet they got such great results with that type of thinking that by faith I had to take on that level of thinking and desert my own present level of thinking that I'd done so long, was so comfortable with, and deemed as right. See, everybody always thinks their present thinking is right. Almost nobody thinks their present thinking is wrong, yet people get varying degrees of results with their right, whatever they think is right. So you have to judge the fruit of of what is right. I'm not talking about a morally right. I'm talking about like because there's moral rights or wrongs, but you don't get richer by going from necessarily a moral right to a moral wrong or whatever. I'm talking about morally right is a given no matter what. But there's different degrees of the way that you structure your finances, the way that you strategically do your finances that will make or break you. In this whole transition with the Maven and that income temporarily falling off so much, it would have crushed me if we had not built up savings and investments over time. It would have absolutely crushed me, and it didn't, only because of that. So what I'm telling you is something that I've lived and practiced throughout time, and thankfully I know many of you have as well. But I would constantly challenge you to be willing to alter and change your thinking. And people are so trust their thinking, and they're so comfortable with their thinking, and they so assume that their thinking is the right thinking that they're rarely apt to change it. And that's why if you're born into middle class, you're born into middle class thinking, and you rarely ever exit it for upper class. If you're born into poverty, you tend to stay in poverty, your whole family's poverty, and you tend to not pull away from that gravitational pull of the thinking processes of your family, because your family thinks a certain way, and it's produced a certain level of assets and income and wealth, whether that's poor, middle class, or upper class. And so when you get a revelation of that, it tells you that one of the hardest things that you will ever do in life is change your way of thinking that you thought so long and been so comfortable with, and you thought is the way to go, because everybody thinks their way is the way to go. And even where I'm at right now, I know there are higher levels of thinking that I can obtain out there, that somebody that thinks even smarter and brighter and further down the road than me. That's why I've read investing books of people who've been doing this 30, 40, 50 years, because I'm at 25 plus year mark. So there's ways that they think, and I immerse myself in their thinking by reading their books, listening to their interviews, listening to their speeches, different things like that, because I know that's the key to my next levels and how I change in my thinking. So it's a total metamorphosis, and it's like a staircase. There's always another step and stair up to take you higher. There's not a plateau. There's not a top, but there's like almost like this eternal staircase where you can always go higher in your thinking. So, and another way that I do that obviously is through reading the Bible. The Bible says, God says that my thoughts are higher than your thoughts and my ways are higher than your ways, says the Lord. So that's the scripture in the Bible. And so I have to trust that when I read Bible scriptures, that those are higher level thinking than Sean would naturally think. And I can't trust my own intelligence on it. I can't trust my own logic on it. I have to throw that aside, and I have to, by faith, take on God's thoughts in the Bible about it, which are higher thoughts than mine, which will get me further in life than I would have ever gotten on my own. And so, just like a child has to trust a parent, and many times your kid will ask why, and sometimes your kid won't understand why, and your kid sometimes thinks they're right in thinking the way that they are, and you as the parent know better, and they just have to trust you, and they have to exchange their level of thinking for your level of thinking and trust your level of thinking so they can get a better result. So it is with us as God's kids, as children of God. We've got to do that same thing. And that's why if you're not a Bible reader, if you're not a churchgoer, you need to be. Because if you're not, you are gypping yourself on this side of eternity. Because you've got lower level thinking than you could have if you just picked up that book, picked up the app on your smartphone. Because now there's free Bible apps in our smartphone, like YouVersion and stuff like that, that will give you all kinds of different translations of the Bible, King James, NIV, whatever you find easiest to read, that are free to you, that you can have on your smartphone, your iPad, your computer, etc. Or go out and buy an old-fashioned Bible. Either way, it's all the Word of God, and immerse yourself in that, and steep yourself in church and the Word of God, and over the course of a long period of time, watch how your life changes, watch how your thinking changes. If you don't believe me, see a couple who is immersed in church for 20 years, and then for whatever reason, you see them exit church and they get distracted, they don't like a church, they get out of church, they don't seek another church, whatever the deal is, they get out of church, offended, whatever, and they get out of church and they don't get back in church. And a lot of times, within the next year or two or three, they're at each other's throats and divorced and hate each other when they just had 20 years of making it just fine. Sure, it's had its struggles along the ways, its ups and downs along the ways, and no marriage will ever be perfect. But they had sustainability in that marriage when they were listening to God's thoughts and God's words and His ways about how they need to treat and be with each other. They get away from that. They get far removed from it. And the Bible talks about it as like a man looking in the mirror and going away from it and forgetting what man of man he is. We get away from the mirror of the Word of God, and we forget how we see ourselves, and we also forget how God thinks. And we start reverting back to our thinking, which is lower level thinking. We love to think our thinking is so high level, because of all the books we've read and all the things we know and all that. But relative to God's thinking, it is low level thinking. So I've got an IQ that's in, I forget, the top 3 or 5% of America or something like that. So it's way on the end of the bell curve, right? But on that long that far long tail. But I could gloat in that. I could trust in that, and I could say, "Oh, I'm so intelligent. I'm so smart. This and that," and I could trust in Sean's thinking and intelligence, and that would be limited, low level thinking, because God's thoughts have already been established in the Word of God, and it can take me so much higher than any of my thoughts could ever. I mean, I could have God level thinking, not me being a God, but following after God by reading the Word of God, or I can have Sean level thinking. Which do I want? So I've had so much better life than I ever deserved and never could have gotten on my own because I exchanged my level of thinking for God's level of thinking. And so, as it concerns investing, you came into this thing. You came into the Logical Investor newsletter with your level of thinking on finances, on investing, on your thoughts on how investing should be, what works, what doesn't work, what you should do, what you can add to, what you can take from, all that stuff. You've got your level of thinking, but what kind of fruit has it borne? If it does not bear the fruit that you want, and you know that there's greater fruit to be had out there, then you know that you need to trade your thinking for a higher level of thinking. And right now, since you've signed up for the Logical Investor newsletter, by you paying, that means that you believe that I've got something in level of thought process and result that is greater than what you've had in the past. If not, you're dumb for signing up, so you have to be thinking that. And so it's not that I've arrived, but in 25 years of watching markets, I probably have learned a lot more than many of you have, even though many of you know more than me in probably many other areas of life. But in this area of life, of taking the majority of my life and watching markets, or at least half my life, and watching markets with it and how they function and how they react to stuff and how they're valued and how booms and busts happen and how crowds react and how they wrongly react rather than properly respond, and then watching the greats, unemotionally react and respond rather, like the Warren Buffetts and the Sir John Templetons of the world and the Peter Lynches of the world, and learning from those seasoned guys. It has totally revolutionized the way I think. But there's nothing that time can do a ton if you have spent that time wisely. So time alone doesn't make you better. That's why sometimes the older people get, the more bitter they get. So time doesn't necessarily make you better unless you've made time your friend. And the only way you make time your friend is if you've made time a learning experience along the way, to learn and to pick people's brains that you believe are greater than you and smarter than you in the area that you're wanting to improve in. So not that they think they're greater than you, but that you think that they are greater than you in the area that you want to improve in. So it's one of the reasons why I have, the pastor that I do, Keith Craft of Elevate Life Church. You can see a lot of our stuff at elevate.life online if you ever want to. And he's got a book called Your Divine Fingerprint that I would encourage you to get. It's by Keith Craft, Craft. You can find it on Amazon. It's called Your Divine Fingerprint. And it's got a lot of chapters on a lot of higher level ways of thinking than you think now that are there, that are extracted from the Bible. They're biblical thinking. We're not talking about some mystic, weirded out thinking, no cultish crap, none of this weirded out stuff. No Mid Eastern, Asian weirded out cultic thinking. We're talking about sound biblical thinking. Um, that is brought to light and that helps you to grow to a higher level of thinking. So anyway, take enough time for all that, but I would encourage you to, main thought is that a lot of you still need to always focus on, I know this feels right to me, I know this seems right to me, but Sean says this, I need to trust that because he's been doing it far longer. So you can always take the hard road in life. It's like the kid doesn't have to listen to their parents. They can learn every hard lesson in life that life has to offer, and they can slow their progression down. But what you have paid for is 25 years of experience, which should accelerate your pace of learning and growing an investment result if you follow it. So again, it would be dumb to, people think, oh, I've got to think it through for myself. I got to prove it all out for myself. I've got to, believe it for myself. I got to see it for myself. This and that. That's the slow growth path of life. It's low level thinking. So your fast track in life is to find somebody who's already done it. They're doing it better than you, and it took them longer, and they gained all these years of experience doing it. And you glean from their experience, and you obtain what they've obtained faster than they ever obtained it because you had the wisdom to tap their level of thinking, their level of experience, their level of expertise, rather than your own doing it the hard way. It's like the kid not listening to the parent when the parent knows better. So obviously, I'm not your parent, but as a parent has higher level of thinking in certain areas than a kid, in this particular area of investing, that's where I've got a higher level of thinking that is been proven and worth following over time, because it's a very emotionless approach. It's a very measured approach. The system makes logical sense. Buying big companies at cheap prices when sentiment is bad and negativity prevails, that's when the value is most to be had, and with technical indicators giving us better edges here and there of entries and stuff like that. Not calling bottoms by any stretch, but better areas to be averaging down in and over time producing a superior result. So it's a great system. It works, but it works over time like all systems do. Nothing is instant. Nothing is quick riches here. If you ever read the Proverbs and the Bible, and all the Bible, particularly the Proverbs, it talks about quick riches. And what do Christians want to do? They want to go after quick riches. It's the dumbest thing in the world. And it's because they don't know what the Bible has to say as it concerns money and finances and investing. And the Bible has a ton to say about money, finances, and investing. And if you don't know what any of that is, you can pick up my book, The 6 Keys to Financial Success. You can just Google it and find it in any form, or you can go to ebookit.com, ebookit.com, and put in the 6 Keys to Financial Success, or you can just put in my name, Sean Hyman, and pull it up, and it will, I go through the Bible and teach what the Bible has to say about money. So anyway, that's it for this week. Thanks so much for watching. Talk to you later. Bye bye. God bless.